What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I wanted to take a quick look at these two charts, two trades from last month. All right. And we're looking at ACB templates potentially. All right. Now, remember this Stacy's system. It seems like it's engineered to get you in the market, right? Like we're concentrating on setups, we're looking at entries, all of this stuff, right? But in reality, Stacy's system is engineered to keep you out of the market just as much as it is to get you in the market. You understand? Sitting on your hands is a big part of this strategy and trading in general. And the reason for this is because we're trying to wait until we have the odds really stacked in our favor, right? And we let the market bring the trades to us. Now, when you're looking at this chart, right, this is one whole month. This is the month that just passed, okay? April started right here, right? And here is the month of March. Now, if you took one trade this entire month, right, and it doesn't even have to be these big days either, right, you can see that right here we're breaking out of the current low of the month. We are, right, breaking that level with 3 days of lower closes, right? 3 days that compared to the previous day close and breakout, right? 3 days of lower closes down into the lowest close of the month, all right? That happens on a Friday, and then the next Monday is our first green day signal day, all right? Which means we may come to our charts on Tuesday looking for a long opportunity. Now, this is the daily chart. You can see the wicks on these candles, right? Almost every single one of these candles has wicks on both sides of the candles, right? We've been talking about this a lot lately. Those wicks represent very specific things, okay? They represent more than just the simple high and low of the day, all right? If you look at Tuesday, this day right here, all right? We open, and at some point, we put in that lower wick. That lower wick is a portion of intraday price action that traded below the previous day's closing price, all right? In other words, the market trades back into the previous day's high and low range before continuing on its originally intended direction, okay? So if we can buy this market anywhere below the previous day's closing price, we're getting a good deal, all right? If we are trading this first green day signal day because we're expecting a higher close the next day, right? And if we go ahead and zoom in here, this is our first green day signal day, right? Here was our third day of lower closes, our lowest close of the month, a close in breakout. The market coils sideways through Tokyo and London, puts in a low in London, and then hikes higher and closes near the extreme, all right? And then our Tuesday, we get a beautiful ACB trade coming out of the London session, all right? You can see here, let's zoom in, right? Right around here is our closing price. This market opens and starts to dump down below that closing price of the previous day, all right? And then capitulates into the London open, right? And then starts to hike higher. Now, this is a 15-minute chart. Even if you waited for your first 15-minute candle closure above that EMA, entered, put your stop at the low of the day, and then targeted this level or this level, all right, or just held until the close of the day, you would have made out like a bandit, all right? And if you can think about this, this is exactly what you're expecting. This is exactly what you're looking for when you come to your charts on Tuesday. You're looking for the market to, in a session window, dump down below that previous day's closing price and reverse to go higher, all right? That's exactly what you'd be expecting. It's exactly what you get, and you're off to the races. A beautiful opportunity on that day. This would be that one trade on this one pair that you size into and make a lot of money. It's one of the days where it's easy to make a lot of money, and that's where we want to concentrate the majority of our efforts. All right. And now here we're looking at the US dollar, Japanese yen. And again, here we have 3 higher closes into the highest close of the month, okay? We have our close in breakout on a Wednesday, all right? And then the very next day, Tokyo breaks out of that previous day's high, trades lower, and closes lower. There's our first red day, signal day, after 3 higher closes, a close in breakout, okay, at the high of the month. And then the very next day, 7:30, we have a very nice shorting opportunity on this market in line with that first red day signal day. Now, here's our closing price. You can see that the market has already pumped up above closing price, started to fail, pumps back up to closing price, fails, pumps back up to closing price, fails, going into that New York open, right? Your first close below that EMA, somewhere around here, you enter, stop loss, hold till the close of the day. Another easy money setup, okay? Here's a close look at the same type of setup, but on the Canadian dollar, Swiss franc. All right, here's a Wednesday close and breakout at the high of the month. Okay, we're at the highest closing price of the month with a close and breakout signal. Right, and you can see we pump up, close and breakout. This market coils sideways and then pumps up going into the New York Open, taking out that highest close of the month, taking out the high of the month period. Okay, we get a nice little 3 push pattern into the high before failing. All right, right here, this red vertical line you can see is the 8:30 open. All right, so we've dumped down going into 8:30. We pump up for a small corrective pullback type of move, coil sideways again, and then dump. All right, anywhere you can enter in here, put your stop loss here, and hold till the close of the day or target the lows from the previous day. You understand? Another great ACB template. You can see the levels that are in play, right? We've broken out of the high of the month and reversed. We're going from high of the day to low of the day, right? A beautiful opportunity. These are the opportunities that we want to be sitting back and waiting on, right? We know exactly what we're looking for, right? We want at least weekly levels in play, but at best we want our monthly levels triggered, all right? Because what this means, when we break that highest price of the month, right, we are triggering higher time frame traders in. Now we potentially have monthly time frame traders, weekly time frame traders, daily time frame traders, all trapped on the wrong side of this market. Once we trigger that level, we reverse and sell aggressively coming off of that level once all of these orders sitting up here have been absorbed into the market, right? That's why we have such an extreme, explosive, parabolic move on this market, because all of these higher time frame traders have been suckered into taking the wrong side of this trade, okay? This smart money trade. I hope that this makes sense to you. Go back on your charts, look at your daily time frames, mark off the high and low of the previous month and the high and low of the current month, and inspect these patterns. 3 higher closes into the highest close of the month, okay? Inspect those patterns. You'll see that those 3 higher closes, a lot of the times, somewhere in those 3 higher closes, we will be breaking out of the current month's high or the previous month's high, right? Or with 3 lower closes, somewhere in those 3 lower closes, we will be breaking a monthly level, triggering that monthly level before the market shifts in the opposite direction and we receive our signal day and trade day, all right? But you do not need to take 40 trades every month. You understand? You can make out like a bandit simply by taking only 1, 2, maybe 3 trades a month if you're looking for the best A triple plus type of setups. All right. So I hope that this makes sense for you. Until next time, man, I hope you continue to free your mind.